Good morning, everybody. Welcome to another day of the Market Report brought to you by Mike Bjork. Today is Friday, and TGIF, and September 27th. We got a couple important economic news releases scheduled for today. And we're going to start off with the personal income for the month of August. We had a 0.2% growth in the month of July, and the forecast was supposed to be an improvement of 0.4%, and it came in that forecast. So great news. People are getting paid more. We all like to see our wallets a little bit thicker. And we got consumer spending month of August. So again, we had a 0.2% back in July. The forecast is at 0.3%, and it came in at forecast. So good news right there. August typically is a bigger month, primarily because back to school for spending. So that's something we would normally watch anyways. And then we also got the core PCE. Now, the PCE is one of the favorite gauges for inflation for the Fed, and when you strip out the food and energy, which creates a volatility, you get the core, and this is what we're looking at. So we got basically three different inflationary indexes that the Fed looks at. We got the wholesale one, which is on the wholesale levels. We got the CPI as well as the PCE. So the consumer level is what they really look at, and that's the PCE and the consumer CPI. And so basically we had a 0.1% growth in the month of July, and the forecast was to continue, and it jumped up to 0.2%. Now typically we would be a little concerned, maybe a big jump, even though that's not a huge jump, but we've been amazingly very low in terms of inflation. So it's actually kind of good news in this respect, because there's been concerns of maybe deflationary periods. So this kind of helps out a little bit that we're getting a little spike in the PCE or inflationary levels here. And last but not least, we got the consumer sentiment for the month of September. So we had a 76.8 rating on the index back in the last reading, and the forecast was supposed to improve to 78, and it did improve some, but it fell short of the forecast at 77.5 on there. So people are feeling okay, but not great about where things are at. So we're going to jump over to the headline news and see what's going on over there. And currently, stock market's down, and a lot of it has to do with the concerns of lack of progress on the debt ceiling. So Congress is still kind of stalemate. The deadline is midnight Monday East Coast time, and there's still nothing. It doesn't look like they've made any inroads as to any solution. Now, most likely what will happen is they're going to probably have a temporary solution to delay this for a few months, and then we'll be back at this again in December. So this is something that we really need to kind of keep an eye on. Government shutdown is obviously not the way to go, as we would default on quite a few of our loans. So this is something we need to keep an eye on. We're basically at a point where mid-October we would reach that debt ceiling and would probably potentially default because we can't get above that current debt ceiling. All right, so let's go ahead and take a look at another item here is Fed members Evans' comments. Now, Evans, he's a member out of the voting member out of Chicago, and basically he was speaking to an audience in Oslo, Norway, and basically he was saying that, even though it might be possible at the next two meetings and Fed meetings coming up later this year that you could potentially do tapering, but it's also a good chance that we could not see it until 2014. So he's the first member to actually mention 2014, and of course this could help out both, ease concerns a little bit, because obviously they like that free money basically. So that will help out lighten things up. But right now the stock market's basically being affected by the concerns of lack of progress on the debt ceiling with Congress. Now let's take a look at the bond market, and as a result, because the stock market's down, a lot of that money is going to flight to safety, which is the bond. So we're kind of the benefactor of what's going on with the debt ceiling, and right now we're going upwards, so it's kind of nice. We're still seeing a trend. Now yesterday's low, it didn't reach the lowest low, so we're still in a nice upward trend. If you take a look here, this trend is still going upwards, so it's kind of a nice range, and now we're at 101.78, so we got a nice improvement in the interest rates today. We could potentially, if you want to think about it, reach about the 103 level here. That would leave us to be about 50% correction from where we were back in the which typically is what happens when you see a rebound, at least a 50% correction in the market. So that could bring us up to about the 103 level there. So I wouldn't be surprised, but we may not see that immediately, as we could see some sideways movement, maybe even drop down a little bit and then back up. But that is something that could be foreseeable in the future as well. All right, folks, I hope you guys have a great weekend, and I'll love to see you guys next week. Again, thanks for watching, and see you next week.